Joining us is Kavita Shirvaikar, MD at Patel Engineering. Kavita, firstly, congratulations for the strong set of numbers that we've already seen. If you could help us understand, one, the revenue growth has been higher than what you had guided for. Margins are in line with the 14% guidance as well. Is this something that you think will be continued in the second half of the year, or do you think you will outperform these numbers as well?
Hi. First of all, thank you very much. See, let me tell you, we are on track on execution. As you have seen, our revenue growth is 15% for the quarter. Our guidance was 12%. So let me tell you, we will be continue to, on track. One example like Subansiri project, its value is around 1500 crore. We have executed around 1500 crore work in 4 years. So let me tell you, we have a strong team of execution and we are on track.
Hi Kavita, this is Anushi joining in. So firstly, you mentioned that 10% was what the guidance was for this year. Now, if we move forward to the next year, it's about 15 to 20%. Want to understand from you, what are the key growth drivers that you're looking at for which you're aiming for this higher revenue growth? And while the FY25 margins is at 14%, do you see a further uptick in this number?
See, let me tell you, what are the growth drivers? As you know, we have a strong order book of 17,000 crore, 64% coming from hydro sector and around 20% from irrigation sector, where we are the pioneer. Like we have completed 87 dams. We are the pioneer of micro tunneling. So all put together, execution at the ground level, execution, a strong execution team, and our vision. So that is the growth drivers for us. And over and above, as you know, we are consistently reducing the debt. Our debt last March, it was 2,000 crore. Now it has come down to 1,500 crore, almost all about. So we are continuously monetizing non-core asset and focusing on our core sector. So going forward also, we are fairly confident to maintain the growth and margin at the same level.
Right. Kavita, a follow-up that I have on this is you mentioned about the debt reduction. What's the plan from here on? We are at almost 1,438 crores. Where would it be by FY25? And what's the target in terms of next year as well? And what is the monetization plan from here on, taking into consideration that you've already monetized around 330 crores worth of your non-core assets?
So this year our plan was around 150 to 200 crore, but we have already achieved around 330 crores. Next half also we are expecting to around 100 to 150 crore. And next year onwards, we are saying ki we will be, though we are targeting 15 to 20% growth year on year, but we will be able to maintain the debt level at the current level. Like our interest cost will not go up, but our revenue and margin will go up. So absolutely our net profit will increase.
Okay, so the debt levels will stay at similar levels as that. Is that what you're implying?
Yeah.
Okay.
Overall, over and above growth, our debt will remain at the same level.
All right. And now coming to the order book, now you've mentioned about your order book which stood at about 17,000 crore. I want to understand, of this 17,000 crore, how much do you plan to execute in this next half itself, and what is the kind of pipeline that you're currently looking at?
See, we have first half, we have already achieved 2,200 crore. Our target for this year is 10% growth over last year. So balance also, we see around 2,500 crore next 2 quarters we are expecting to achieve. And next year, our target is to 15% year on year.
Okay.
And as regards order book, we have already started submitting the bids because projects, as expected last year, because of election year, order book was subdued. Now, post Q2, orders started coming for bidding. Bids are under evaluation already under 10,000 crore. And over and above, we have shortlisted around 40,000 crore of worth of projects which will be bidding in near future. So we are targeting in next year from now onwards around 10,000 crore, considering our ratio 20%. So around 10 to 12,000 crore order book we are targeting in next 1 year.
Okay. Taking the order book that you are targeting into consideration, would you still maintain your growth guidance of 15 to 20%, or do you think you will be able to surpass that? And an added question to that is, what are the kind of high value projects that you're expected to take to expand your portfolio?
See, let me tell you, hydro, there is huge opportunity available, and overall, the single size of the project itself is like 10,000, 15,000, 20,000 crore. So let me tell you, we have signed MOU with RVNL and IRCON, to such large bid for such large value projects, which will give us, another milestone going forward. Now, as regards target 15 to 20%, it is on a concern. We are fairly confident we'll be able to maintain that target.
Kavita, I want to come back to the pump storage projects more. I want to understand what is the current opportunities that we are looking at in this space, because this is an area where a lot of development is happening. 60 gigawatts is under survey, as you've mentioned. Want to understand what is Patel Engineering's role going to be in this, and of this 15 to 20%, I understand that this is a huge contributor to your business. Have the bids already started for this, or it's after the next 1 to 2 years that there would be a ramp up that we'll seeing the order inflows from this side?
So as you rightly say, government focus is on pump storage. Last budget also we have seen there is huge focus on pump storage projects. So like 60 gigawatt, which is under survey and investigation, let me tell you, some of the projects already started coming for bidding, and which I said around 10,000 crore, which bids under evaluation. Out of that, pump storage also we have started targeting. We have started bidding for the projects. So our target, let me tell you, currently around 4 to 5 projects under execution. We are already doing one project for the government. So we are quite hopeful and target ki around we will continue to maintain our share of revenue.
Considering the pump storage projects that you've mentioned, another one I wanted to mention, what is our Capex plans going to be? Because if you look at in the first half and compare it with the last 3 years, the Capex was comparatively softer. So are we looking to ramp up our Capex for the next half, and for even if you can give us an outlook on the next 2 to 3 years, what the Capex number is going to be?
See, Capex is based on the new order book. On an average, around 100 to 150 crore addition every year we make to the Capex. Now, currently, as I mentioned, that last year, because of election, order book was subdued. First half, Capex is looking at the lower side. But as I mentioned, going forward, we are targeting around 10,000 crore of work in next 1 year. Accordingly, Capex also will from Q2, Q3 onwards, and next year it will be in the same range.
From the hydropower space and the 10,000, 12,000 crore of opportunities that you're looking at, another kind of an update which was there from NHPC. You've been declared as the lowest bidder for this 240 crore of project. What is the development happening here? What's the progress here? When do you plan to add this to your order book? If you can give more clarity on this one.
See, we are L1 into 40 crore work project. We are expecting LOA to come shortly. The project duration is 18 months, and we are fairly confident we'll be able to complete within given timeline.
Coming to this, I wanted to again emphasize on the margins. Now, if you can just give us a breakup, like if hydro is your biggest segment, but there are other segments also that you have. If you can give us a margin profile, do the margin profiles differ across the various segments that you have? If you can just give us a breakup on what is the kind of revenue mix that you're targeting and the margins of these segments that you have currently.
See, as you know, our majority order book is coming from the hydro. So hydro, there is a margin of 1 or 2% higher than other sector, and irrigation is 1 or 2% lower than the normal margin. So on an average, we are saying we will be able to maintain the margin of 13 to 14%.
So 13 to 14% is the margin that you are looking for this year. Now, if you look at your overall project mix also, if we take the first half in consideration, H1 was kind of muted on the government side due to the elections which have taken place. What is the kind of update that we are looking at from the government side, and even if the private side, how is the kind of orders that are taking place right now? Are we seeing a pickup happening from the next half onwards? If you can give us more clarity on that.
See, as I said, let me tell you, our 90% of order book is coming from the government. 95% from the government. Now, more focus on PSPs. PSP, there are some of the private players also started taking up the project, like Adani, Tata, JSW. So, as regards PSP, along with government, we are targeting private clients also.
Okay, so that is what is the outlook from the government and all that. Another kind of sector which I want to focus on is irrigation and tunneling. While it has a smaller mix as compared to the hydro side, I want to understand what is the kind of business opportunities that we are looking from these segments.
See, let me tell you, tunneling is our one of core strength. We are the pioneer of the micro tunneling. We had implemented in Ghatkar project and Mumbai and Delhi. See, let me tell you, tunneling also is our one of the core strength. We have till now completed around 250 kilometer of tunneling. Going forward, we see huge opportunity in that sector as well. Around 250 to 300 kilometer further, which will come up for bidding in near future, like railway, road, tunnel. Let me give you an example. Sela Pass Tunnel, which was one of the complex project we completed for BRO. It was at 13,000 feet height, and we completed within given timeline, successfully completed, where Prime Minister inaugurated. So we are targeting such strategic project. Recently, we substantially completed a tunnel for the IRCON railway tunnel T15 at JNK. So we are targeting one of our major sector, like along with hydro tunneling sector also we are targeting.
Right. Very quickly, a last question I have, Kavita, is specifically from a government spending perspective, what is the outlook looking like? Because the spends or the capex in the first half of the year has been slightly lower as compared to the guidance that the government has laid out for the full financial year. Are you expecting that cover up to happen, and hence the quantum of government projects that could flow in the coming quarters in financial year will be higher?
Yeah, I expect the same, because as large projects are coming up bidding for in near future, so Q3, Q4 or next half year, we will see a lot of projects coming for bidding.
Right. So again, government projects is going to be of one focus area as well. Thank you, Kavita, so much for joining us on the show and sharing the views. But clearly, that's the management of Patel Engineering. If you see a long-term chart as well, right, some bit of cooling off is happening right now as we speak, but still continues to gain around nearly 3% as we speak. 12 months, 9.5% is the kind of up move. You can see the kind of volatility that we've seen in this stock as well. It's hit a high of almost 76 and then cooled off to now levels of almost 45, 50 at the lows. So that's what is the range that we've seen with regards to where Patel Engineering goes.